It is 2026. If you've been online at all for the last 2 years, you've been bombarded. First, it was the AI boom. Then the next big thing in crypto. Then whatever tech startup promised to change the world last month. It feels like if you aren't day trading the latest AI robotics company, you're falling behind. But here's the reality check. While everyone was chasing the next NVIDIA or trying to time the 2025 market swings, a quiet group of investors was sitting back, doing absolutely nothing, and getting richer than 95% of the traders glued to their screens. I'm talking about the strategy that has survived the inflation of the early 20s, the tech rallies, and the interest rate hikes. I'm talking about index funds. In this video, I'm going to show you why, even in 2026, in this hyper-fast digital economy, the lazy method is still the absolute best way to hit your first million. And I'll show you the exact 3-fund setup you need for this year's market. What is an index fund? Let's get back to basics. Whether it's 1996 or 2026, the definition hasn't changed, but the composition has. An index fund is a basket. Instead of buying one stock, you buy the whole market. Think about the S&P 500 right now. In 2026, this index is heavily dominated by tech giants. When you buy an S&P 500 index fund today, you aren't just buying stocks. You are instantly buying shares in the massive AI infrastructure companies, the cloud computing giants, the green energy leaders, and the consumer staples we all use. You buy one share of the fund, VFIAX SPYVOO, and you own a piece of the 500 most powerful companies in America. Here is why this matters right now. In 2026, companies rise and fall faster than ever. Remember the hot companies from 2021? Half of them are irrelevant now. If you picked single stocks back then, you might be down 50%. If you picked the index, you're sitting on record highs. The index automatically cleans itself, dropping the losers and adding the winners so you don't have to. Why the smart money is losing? We have new data for 2026, and it tells the same old story. 1. The AI trap. The last few years have convinced people they can pick winners. I'll just buy the AI companies, right? The problem is, by the time you hear about the next big AI stock on Twitter or YouTube, the big hedge funds have already priced it in. You are buying at the top. With an index fund, you already own the winners before they become famous. 2. The fee drain. In 2026, investment apps are slicker than ever, often hiding fees and spreads or premium subscriptions. Active fund managers are still charging 1% or more to try and guess the market. Meanwhile, index funds have become even cheaper. We are talking expense ratios of 0.03%. That is basically free. In a world where inflation is still a concern, keeping your costs near zero is the easiest way to boost your real returns. 3. Algorithm dominance. You are no longer just trading against guys on Wall Street. You are trading against quantum computing and advanced AI trading bots. Do you really think you can click buy faster than a supercomputer? You can't. The only way to win is not to play their game. Buy the whole casino instead. The updated 3-fund portfolio for 2026. So how do we build this portfolio today? The bogglehead philosophy is timeless, but let's look at it through the lens of the 2026 economy. Fund number 1. Total U.S. Stock Market Index, 60 to 70%. Examples: VTI, Vanguard, or ITOT, iShares. Despite talk of a recession every year since 2022, the U.S. economy remains the innovation hub of the world. This is your core growth engine. Fund number 2. Total International Stock Market Index, 20 to 30%. Examples: VXIS or IXIS. Here's the 2026 twist. Emerging markets, places like India, Southeast Asia, parts of South America, are digitizing fast. Their economies are growing rapidly. If you only buy U.S. stocks, you miss out on the next global boom. This fund ensures you own the Apples and Amazons of the rest of the world. Fund number 3. Total Bond Market Index, 10 to 20%. Examples: BND or AG. Why? Interest rates have settled into a new normal compared to the zero-interest era of the early 2020s. This actually makes bonds more attractive now than they were 5 years ago. They finally pay decent yield again. They are your safety net. Your 2026 action plan. Here's the strategy I want you to start this week. It's called automated wealth. In 2026, we have tools that make this seamless. Log into your brokerage app: Fidelity, Schwab, Vanguard, M1 Finance. Set up a recurring transfer, let's say $500 on the first of the month. Select your split, e.g., 70% VTI, 20% VXUS, 10% BND. Turn on Auto Invest. That's it. Stop checking the news. Stop worrying about the election cycle. Stop worrying about what the Federal Reserve does next month. If the market crashes in 2026, great. Your auto deposit just bought more shares on sale if the market rallies? Great. Your net worth just went up. You win either way. The mathematics of hesitation, the snowball effect. Right now, you might be thinking, this strategy sounds great, but the world feels unstable. Maybe I'll wait until the geopolitical tensions cool down or until the next election cycle is over to see what happens. I need you to understand why that thought process is the single most expensive mistake you will ever make. Let's look at the numbers. If you start investing just $500 a month today, in 2026, and you get the market's historical average return, in 35 years, you could be sitting on over $1.1 million. That is the power of the compound interest snowball. But here's the scary part. If you wait just 7 years, waiting for the perfect economic conditions, and you start in 2033, you don't just lose 7 years of profit. To hit that exact same $1.1 million goal, you would have to invest nearly double the amount, almost $1,000 a month, every single month for the rest of your life. By waiting, you essentially punished your future self with a 100% tax. The first few years of investing feel slow. It feels like nothing is happening. But those early dollars are the soldiers that go out and capture the most territory for you. Furthermore, we have to talk about the reality of our currency. In 2026, we all know that a cart of groceries doesn't cost what it did 5 years ago. Cash is not a safe haven. Cash is a melting ice cube. Every day your money sits in a standard checking account, its purchasing power evaporates. This index fund strategy isn't just about getting rich, it is about defense. It is the most reliable shield you have to ensure your buying power grows faster than the cost of living. So please do not fear a market dip. The market always recovers. Instead, fear the guaranteed mathematical loss of doing nothing. The courage to be boring. I want to leave you with one final thought. We live in an attention economy. Every app on your phone, every news headline, and every guru on social media is fighting to make you feel anxious. They want you to feel like you are constantly missing out. They want you to feel like if you aren't trading the latest trend, you are falling behind. Why? Because when you are anxious, you click, you watch, and you trade. That is how they make money. But real wealth, the kind that buys you freedom, not just a Ferrari, isn't built on anxiety. It is built on peace of mind. The strategy we talked about today isn't just about the numbers. It is about buying back your life. When you own the entire market, you don't have to check your phone every morning to see if a CEO tweeted something crazy. You don't have to panic when the news says recession looming. You can just live. You can focus on your career, your family, and your health, knowing that your money is working in the background 24/7, capturing the growth of the entire human economy. It takes courage to be boring in a world that is addicted to excitement. But I promise you, 20 years from now, looking at a 7-figure portfolio that you spent almost 0 time managing, that is going to be the most exciting feeling in the world. So don't just watch this video and nod along. Go set up the transfer. Make the decision today to stop gambling and start investing. If this video helped you see through the noise, please hit that like button. It truly helps the channel reach more people. Subscribe for more sanity in a crazy financial world. And as always, thank you for watching. I'll see you in the next one.